Okay, cool. Okay, so your question is, how do I interpret news when it comes to my trading? How does news actually impact it? I see an inefficiency. I've looked at the news. I see a piece of news. What now?
And I guess, and is that inefficiency actually beneficial to me, or when should I see an inefficiency and I should stay away from that because it's probably going to blow up.
Got it. Okay, cool. Let's do this. Let's use a whiteboard and let's think this through. Okay, this is going to take some time to think through though. Okay, so the first thing to always remember is this. When we are looking at the market, right, we have time zero, right? Let's say this is like a timeline, all right?
Yeah.
We always have to remember that if we're at this point in time, right, we have us and the market. We are all here at this point in time. Nobody exists in the future. We are all over here. And we have two things that happen. We have, the reason I say us and the market is we know two things for certain. We have our opinion of the future, and there's the market's opinion of the future. The difference between the two is how we make money, right? So we're looking at a stock. I'd say we're looking at, I'm not always super caught up with the Activision situation, but we can, we'll use a hypothetical. So let's say we're looking at ABC stock, okay? And ABC stock is, let's give a little description about what this stock is. Let's say it is an EV company, right? It's like electric vehicles. Let's say it's like a 50 billion market cap. Let's say lots of people trade it. Actually, and let's say not a trash company. So it's not like Nikola, it's at least a Tesla, okay? It's at least a Tesla. And being stable last 5 months. Okay, let's just say that. We know this about the company off the bat. Oh, well, that's not gonna work. Okay. So then let's say we're looking at the market and we see that that yesterday IV was 35%. Okay. And then all of a sudden, today, IV jumped up to 58%. Huge jump in IV, right? And the stock price, the share price, jumped 11%. Had this like massive move for some reason. Okay? Or like, let's say like 8%. Okay? And let's say that the reason this happened, and let's say we look at our forecast of vol, and let's say we do our analysis and we think volatility should be like 47%. Okay?
Yep.
So what we need to figure out now is like, why did this happen? Okay, so we look at the news and we see that that the CEO got fired, or okay, the stock went up. Okay, let's say the share price went down 8%, because usually like these downside news are pretty easy to talk about. Right, so let's say the CEO got fired. Let's say they got downgraded. And let's say lots of coverage of these two things. Cool. So there's two ways to like think about the sentiment. You can think about sentiment in terms of like retail. That's only really impactful in the sense of like if retail is actually trading this thing a lot. But also it kind of just give you a sense of the market sentiment. So something else you use is like you can look at the news and get an idea from the news. Like, is there a lot of negative coverage happening here? Is there more negative coverage than usual? Like this thing maybe only gets like 2 or 3 articles published. Like if you go back a couple months, is anybody talking about this stock? No. Now everybody's talking about, okay, cool. There's like a lot of attention on it right now, right? A lot of attention can drive some volatility because there's just more people. There's more happening. Especially if they're all sharing the same view.
Yeah.
Right? Like think about like it's a peaceful town and then an angry mob shows up. Even if nothing has changed in the town, the angry mob gets everyone on edge.
Yeah.
Right? So let's look at this now. Let's go back to our nice little chart here. And we say, okay. So things let's say we're looking at let's say red equals IV, okay? So let's say, you know, this is the stocks normally, like this is the normal IV that we see, right? We're moving along totally fine. And then it's at, you know, at this point in time here, this is where the CEO gets fired and they get downgraded. Okay. We're also going to include a RV line. We'll make the RV line blue. I made this really confusing, sorry, with the labeling. But okay, so we have our RV line going. Our RV line is like, you know, maybe a little bit below this, right?
Yep.
Right, we have our little risk premium showing over time. And then at this point in time, this news comes out, right? Stock normally moves 3% a day, 2% a day. It just moved 8%. IV shot up. So what happens to these two lines?
Yeah, well, they're both going to go up.
Yeah. So this goes up. This goes up, right? They basically go up like neck and neck, right? Close enough. Now, here's the thing. What did we learn from the news? We know that some analysts are looking less favorably at this stock now.
Yep.
So we know that the analyst is looking at this news that just came out, right? There's some eyes looking at this news right now, and they say, moving forward, we don't expect as good things. Right? So that, and they're talking not about today, they're talking about this whole period of time. Okay?
Yep.
We also know that the CEO got fired, and let's say they brought in somebody else. They fired Johnny, they brought in Susie. Susie's now the CEO of the company. What do we also know? We now know at this point in time, Johnny's out, Susie's in for the foreseeable future. Okay? Now here's where I think it'll click. You remember how at time zero, us in the market were here looking at this?
Yep.
Now we're here. You get it? The market sees these things. Today's price, today's move should reflect with a decent degree of accuracy this change. Why should it do that? Because these events started on day one and ended on day one. The CEO is gone.
Yep.
The downgrade is done. These are now facts. There's no ambiguity around them. Now, there might be some ambiguity around like, well, how will this CEO do? What changes will they bring? But what we have to ask ourselves is, how fundamentally is that changing the company right now? And what drove this? We know the IV would shoot up because the price just changed like crazy. Market still has some uncertainty. But think about it. That uncertainty is based around a lot of the information that we already have.
Yeah.
So why should we continue to be uncertain?
Mm.
Now, maybe the company won't go back to being the same, but given what we see, should we expect volatility to stay this high? Like, let's say, for example, time moves forward, right? We're on the next day now, and realized volatility, we see a, it's obviously like realized volatility looks at the past, so the graph won't show this. But let's say the next day, the realized volatility is like here.
Yep.
Right? We see like a 4.5% move. Up or down, doesn't matter. Well, what if implied vol just maybe comes down a point?
Yeah.
Right. Well, now we're looking at this. We're like, okay, like, I don't think this news is enough to cause this thing to move 8% a day forever.
Yeah.
Right. Like, is this thing really going to move 8%? Like, or if we're at 58% vol here, like, a 4.5% move is actually pretty much in line with that. But for the example's purpose, you kind of get where I'm going. It's like, okay, like market's saying we're going to move this sizable amount still. And we're not saying it's not going to move. But in a situation like this, we can look at this and go, it might be a little overpriced.
Yeah.
It's probably not going to be the world. This is not going to, an event like this is not going to lead to the world's biggest pricing inefficiency. Right? This is not, let's go all in.
Yeah.
But this is like little trade. In my basket of trades, little trade.
Yeah.
Right? Looks like there might be a risk premium here. Vol shot up through the roof. CEO got fired. Person they brought in, I might do a look. It's like they have a lot of experience. They've been in the industry. It's not like this person's going to screw up the company. They were elected by the board. All's good. Okay.
Yep.
Little trade. There's a lot of situations like this. Like, this is one example.
Yeah.
Actually, before I move on, do you have any questions about this example?
No, that's all making sense. So yeah, it's like essentially, it sounds like it's like I suppose the aftermath of the event hasn't been priced in. So it's like, this has happened. Yeah, it's not going to happen again straight away, but we're still sort of reeling from the shock of it, or the market still thinks
exactly. Exactly. Market's still getting it back together.
Yeah.
Right. Figuring out where we're going to land, and it's in those moments where people step back a little. There's a little less certainty around selling vol, a little bit of a premium. Lots of people still want to buy. We can come in and provide that liquidity. Now, other examples could be. Now, there will be examples where it's about the future.
Yeah.
Right. Where
that's the Activision one that I'm looking at, where it's I think what's happening there is people or retail traders are buying calls, because if the deal goes through, the stock jumps up to 95. It's about 77 at the moment, so it'll get bought out. So people are buying calls, assuming that it'll be done within a month. And it won't.
So then, if you are very confident that it won't, you should be selling those calls. Yeah. They're bid. Like, are the calls priced at like $15-20 or something? Like,
they're not
that expensive. They're still like,
look, no.
They might be going for like $5 or something.
Yeah.
Like, so what it would really come down to on that one, so that's more unique. That is very event specific. And what you want to be thinking about is like, why won't this happen?
Yeah.
Like, I would do things like if you have a good reason why you think it, like if you're just like, there's no way it'll be done within a month. I would look at, okay, how much retail is actually looking at this? Because if the market's saying it's going to happen within a month, it's probably going to happen within a month. Yeah. But
well, I'd say, the other thing with the volatility on that is that there's the court case going on at the moment to sort of block it from happening.
It's being blocked, right?
Yeah.
So like that's one where the vol might be justified. Yeah. Right? It's like, think about it. They want the deal to go through. Court case came up. Stock price dropped. Yeah. It's unresolved. like it's binary. Court case goes through, or the government wins, stock plummets.
Yeah.
Government loses, stock rallies.
Yeah.
Right. So it's actually that's a case where the volatility is probably justified. I probably wouldn't go near it.
Yeah.
Right. Like there's a lot on the line. These are big companies, a lot on the line. They're like, these things are going to move like crazy. So I probably wouldn't go near that. But like, like there could be things like, ones that I look at are like, let's say, I'll give you an example. We'll do another example here. Okay, here's one that I remember. It was for Tesla Battery Day. I think it was the first battery day that they had. Okay, so we'll say, we'll make up some stuff here. Tesla trading at $100 a share. Just making up the numbers. Battery day in 2 weeks. Everyone expects big news. Stock has been rallying. Options IV we'll go by percentile is 95%. And we'll see if there's any other piece of news. We know they are going to talk about improvements to their batteries. Right?
Yep.
So if we think about this now, we can draw it like this, right? Let's go back and draw our timeline again. Oops. This one's a little more crooked, but whatever. So right now we are at time 0, right? We have us and we have the market. Battery day is happening here. Right? Let's see here. Basically what the market's saying, the market is basically saying, like, let's say the options that expire here, right? Let's say we have expiration 1 is here.
Yep.
Let's say, okay, so let's say this is 14 DTE. And let's say this is like, I don't know, 20 DTE, whatever.
Yep.
Let's say these are trading at like 40% implied vol. These are trading at like 65. Market's clearly saying something's going to happen here.
Yeah.
Right? It's saying between here and here, stock's going to move like this. Between here and here, stock's going to move like this, which means if we do like 2 minus 1, it's saying between here and here, it's going to move like this.
Yeah.
You see what I'm saying?
Yep.
So here's what we have. So clearly, market is saying something big is going to happen around this event. Tesla is a $300 billion company at this point, something like whatever it was back then. Now it's like, it's a huge company, right? 200 bill, let's call it. I don't know how big it is today. I don't really look at Tesla too much, but so think about it. On this day here, remember, us and the market are looking forward to this event, which means we both see all of this. Okay. Given this information here, what could, and we also know this is going to be really good news. We know they're going to come out and say, we've discovered this amazing improvement in our batteries. This is the day we're going to unveil it.
Yeah.
Sort of like Apple says they're going to release the iPhone 15. it's going to have this new feature where it's foldable, and we're unveiling that it's foldable. Let's say they came out and told us that news here. Where do we see the move? Right? We would see the move here.
Yeah, when news comes
because this is, it's almost like a pre-release.
Yeah.
Right? They just told us what's going to happen.
Yeah.
So that's what kind of happened with this Tesla situation. We all knew what was going on here. But these guys, they said there's going to be more.
Yeah.
These guys were coming in, no care for the price, bidding this up. Bidding up this event, which means they were buying these expirations.
Yeah.
And that's why we were seeing, it wasn't quite this drastic. Remember, like a few vol points can make a big difference.
Yeah.
Right? At the end of the day, remember, our edge is usually very small. So we don't need to be always just going for a home run. Just find these little events where like you think people are being kind of stupid. Right? Or like a little overly optimistic or a little overly pessimistic, and you can build a little basket of those.
Yeah.
And so this is one where we're looking at the future, but we know stuff now about what's going to happen in the future. We generally know the concept. Like if we heard something, the only thing that would, like, unless there's a surprise, we know what they're going to talk about in the event.
Yeah.
So why should that event be expensive? Like imagine an earnings event is coming out in a week, and then the company comes out and says, here's our numbers.
Yeah.
Well, the stock would instantly adjust, because if it didn't, you would be trading it.
Yeah.
So what happens is as soon as the news comes out, people adjust their positions, because otherwise, like imagine a company pre-released their earnings 2 weeks before the event and said, we're going bankrupt.
Yeah.
We're officially declaring bankruptcy in 2 weeks. Imagine the stock price didn't change.
Yeah.
You know what I mean?
Be selling like crazy.
What every hedge fund still holding it? They're just gonna wait. Oh no, we're gonna ride it out for 13 days. No way. So instantly it reflects the future.
Yeah.
So, and if it doesn't, you should be trading that. And that's kind of what happened here. They pre-release information. Vols don't change, sell.
Yeah.
And so these are like the kind of, I hope these like two examples help you, have helped you like sort of think about the news a bit.
Yeah, definitely.